The tax season is upon us, but it's taking a different filing route this year amid the challenges faced by the COVID-19 pandemic. Now, one of the things that taxpayers must find useful, or might find useful rather, in this season is knowing what is taxable and what could warrant returns. If you receive a travel allowance from your employer, but the full amount available for work-related trips isn't used, then you're responsible for this tax. Now, most employees have traveled less for business this year because of the pandemic. SAGE's Yolandi Esterhuizen says that there may be tax implications for employees still receiving travel allowances during the lockdown period. Employees may be able to claim back their expenses for working from home when they submit their annual returns. Well, joining us to help us understand this further, it's chairman of the Payroll Authors Group in South Africa and host of the SAGE Annual Payroll Tax Seminar, Rob Cooper. A very good morning to Mr. Cooper. Thank you so much for joining us.
Good morning, and it's a pleasure.
Now, let's just start off by clarifying what exactly warrants a travel allowance. How do we categorize it?
A travel allowance is only warranted to be paid by the employer if the employee uses a privately owned vehicle to travel for business purposes. That's the only reason or the only conditions under which a travel allowance can be legally paid.
And what then are the tax implications for employees who are still receiving some sort of travel allowance, even though they can't travel as much or even at all because of the lockdown regulations?
There is very definite tax dangers for employees who normally receive a travel allowance. If I can take a step back, the principle of a travel allowance is that it's an amount paid by the employer to compensate the employee for using their own vehicle for business purposes. The amount that is paid has to be estimated by the employer to cover the business travel, and it also covers a portion of the personal travel as well. Now, if the business travel is quite extensive, more than 80% of the travel in the year is for business travel, then only 20% of the travel allowance is taxed on a monthly basis in the payroll. However, if the estimate is incorrect because of COVID-19, and conceivably this is going to happen because for 6 months perhaps of the year, the business travel is going to be zero or very little compared to what the estimate was, then the amount of business travel is going to be far less than estimated, and the amount of tax on assessment is going to go up significantly.
And then, Mr. Cooper, what sort of supporting documents would SARS require when someone is filing their tax returns if they do indeed receive a travel allowance? Are they required to submit perhaps a logbook or, petrol receipts?
They must keep a logbook, and the essence of a logbook is that every day that is travelled for business purposes, in that logbook must be the date, the place to where the person is travelling, say Johannesburg, and the number of kilometres travelled. That's the essence of a logbook, but there must be that record for every day of business travel. And when you come to the end of the tax year and the employee submits their annual return, which they might do with the assistance of a tax practitioner, then the total business kilometres from that daily logbook has to be submitted to SARS, and they use that to calculate the value of the deduction that's allowed for business travel.
And is the employer at all responsible for verifying the information that the employee writes in their logbook to make sure it's accurate?
No, the employer is not responsible for that at all. That's solely a matter between the employer, between the employee rather, perhaps the tax practitioner and SARS. It's the employee who's declaring the logbook. However, remember, it's the employer who estimates the amount of business travel for the year. It's the employee who confirms the actual amount of business travel on the logbook.
And then for the employees who've been working a lot from home lately, what kind of expenses incurred through working from home can be claimed back during this period as they're filing their tax returns?
Well, the commonly charged one at the moment is what's called a home office allowance. But that, in my opinion, is not really a good way to go. Basically, what it allows you to do is to say, well, I'm incurring expenses, office expenses, because I'm working at home. And these might be, electricity, a portion of the domestic worker's salary, and that sort of thing. But there are very stringent requirements before you will be granted a home office allowance and the deduction for those expenses. And there are potentially ripple effects down the line. If you have claimed a portion of your home area as an office, then if you sell that home at a later stage, then that will impact on the capital gain exemption that you have at a later stage. So that is the one option that is being touted very much at the moment, but really one needs advice from a tax practitioner before doing so.
And just lastly, would you encourage citizens then to try as much as they can to actually file all of their returns and do everything online as opposed to going to the branches and queuing up, especially as the country is heading towards its peak?
Absolutely. You can see from recent reports, the Commissioner at SARS was presenting a number of virtual conferences over the last week, and they are strongly encouraging employees not to come into the branches. I think SARS have released something like 31 apps for cell phones in the last month or two to assist employees, to make it easier for them to do all of their tax affairs from home, from their cell phone. So it is definitely the best way to go. These apps are very good, and it allows you the freedom to look at your figures and to make adjustments and things like that. So it's certainly the way to go.
Well, thank you so much for your time, Mr. Rob Cooper, the chairman of the Payroll Authors Group in South Africa and the host of SAGE Annual Payrolls Tax Seminar.